Good morning. I like that little sunshine touch, Paul. Very nice. All right. So markets are up here a little bit after the weekend. I think we have mixed pictures. I'm not so sure what direction it's going to go to, but it continues to act like it wants to go up. We've had 2 Fridays now that was strong buying into the close. The prior one didn't work out so well for buyers, and we had this nasty drop there, which sure looked like it was ready to dive, and it obviously didn't happen. This really doesn't show the craziness of the change. As we look at the spiders and other markets, it actually gapped up toward the high, or maybe some markets above the high of that red bar, which, you've got this, what I called a bull trap up here, where it was a breakout, came down hard, cleared the support, and then came right back up again. Again, this was a gap up day that gapped up near the high, which put in place a bear trap. And I think I've seen that once before over the last, I don't know, close to 30 years, but it's really a crazy kind of a pattern. So now, looking at these futures here, the breakdown that was false. And now this retracement raises the question, can prices get through this high? Since now we've got an area of, resistance here. It's already attacked this resistance once, which is a positive that it was able to get up here, no doubt. You had this kind of sloppy bull flag kind of a pattern, and then this consolidation and the breakout, which was supposed to go up to the 200, it fails. So now it raises the question for me, besides can it get through here, does this turn into an M top? I don't know. We're just going to see how this unfolds now that it's up at resistance. So you could see that it's stalling here, going sideways. And so we've got this little trading range going pre-market and the intraday timeframes. The rejection right here as it tried to go through, but didn't follow through lower. So buyers continue to stand up there and say, I'll take it. So as it gets up here, I guess, that's where I like to say the heavy lifting begins, to see if prices can go through that area. And then if they can, assuming it's not a breakout that fails, I think the assumption is that it comes up to the 200 and this 3,000 level, because there's really very little to stop it. There's this unfilled gap, which I assume will come into play for intraday traders as a reference point. But ultimately, that 200 and that 3,000 level would have to assume a really heavy part to get through. This larger congestion there, and the widely followed 200-day simple period moving average, and the big whole number. So we'll see. It's a news-driven market. Whatever news. I guess the news, whatever today I read was, anticipation of opening up slowly. One day the news is good, the other day maybe not. It's just what we've been dealing with even from last year with the China tariffs. Now it's coronavirus, and this is just what is being thrown at us as traders at this time. So the Qs, same story. They have been showing relative strength. The breakout, the deep pullback. This one had the converging moving averages, 20 rising, 50 declining, 200 flat. You had these overlapping bars right here. So we don't look at the moving averages as being a focus of stronger reference point of support because they're all converging there. We look to the left as always and see, is there really some overlapping prices in that area? And of course, there is. So moving averages, like any other indicator, are subjective, and you need to look to the left, moving average, and see, are they really lined up with something? So it is interesting how they all come together in that spot to that inflection point. Anyway, Accuser, same story, attacking the prior high where was the bull trap. So those traders have to be happy that they're going to get their money back. I don't know what traders would hold on after a gap up and that move down. My plan wouldn't entail that. And such, if I had bought that, it's one thing to have bought down here and be giving room to wiggle, but to have bought a breakout and then a retracement like that certainly would not be. So same story. Do we get a retest and a reversal up here? Or do we go sideways a little bit and go all the way back to the old high? We just look and see bar by bar analysis. Right? This is trending up. The retracement has been deep. It's shown some strength. The buyers came in even on this ugly dip, and now they pushed it up to where prior buyers got caught. So we'll just have to see. All right. Dow has been weaker. You can see it's a little further below. There's the congestion there. There's the swing high. Does it make a lower high? A lot of uncertainty here. The weekly chart obviously is just starting. And could this be a continuation pattern? It may be, meaning it had to move up. Sellers came in, knocked it down. Another try, knocked it down. Bottoming tail bar. If it can clear here, well, where's it going to go? Well, we look to the left. So these overlapping opens and closes here. And let's just do this. And it's right there. All right. So just for clarity, let's, we know that's there. So if it can get through here, right, this would be our next stopping point, theoretically. Could get through it and hit the 200 as well. But these overlapping opens and closes are where that congestion lies. Down below this swing low here, bombs are going to drop, right? There's no doubt. So there's your line in the sand from last week's low across these markets. And last week's high is the line in the sand to the upside. All right. The Russell, right? So the last week or so, I've been talking about how these markets, the bull trap, just the jiggles up and down. I've talked about how this looks more of like a bull flag kind of a pattern that's gotten kind of long in the tooth, but here it is coming up to the prior high, and it's a similar situation. The swing high, resistance there, declining 50 MA, rising 20 MA, kind of reaching an inflection point all over the place where the correction that's been going on for the last 2 weeks is coming together where, hey, buyers, you need to step up here and really can you push it through this level, or is it going to fail and sellers take control and we get a retest? So we're all in the same boat here of sitting through this corrective type of pattern over the last couple of weeks. And as we get now up to this level, I think they got to push it through decisively. Not a peekaboo and come back in. I think they have to push through decisively. And then we can say, hey, let's see if we can keep this thing going and how far will it go? Oil, that's the one that's starting to turn down there. That craziness that occurred. The next contract looks more normal, but looks like it's heading down to the low for the net right now. You can see the 60-minute chart. There's nothing over here prior to the low. And, so comments in the green room about other markets being up, whatever. So percentage gains being up or down really doesn't mean much until you looked at the chart. I mean, anything can be up a certain percentage or down a certain percentage, but if it's smack right in the face of prior resistance, right, being up is a starting point to look. And so up says, hey, that's good if you're bullish. Down, good if you're bearish. And then where's it at? Right, step by step, pretty much common sense. Bonds came to support, now up at resistance, hanging out there. So keep an eye on this here, because if this starts poking higher, odds are the markets are down. And if this rolls over, it helps the markets go up. Gold, pulling back. You see how simple it is? I mean, look, you can put your Bollinger Bands. We use a few moving averages. You can put your other squiggly lines on there. But if you just simply look to the left, support, resistance, it eliminates all of that noise and confusion as to what support and resistance is or where the turning points are going to be. Keep it simple, stupid. All right. Take the spaghetti screen off and you'll see how clarity evolves. Spiders, looking at the ETFs here. More obvious, the bull trap and the bear trap, gapping down below a breakout bar and gapping up above a breakout up bar. Just insanity. I'm not so sure, Clint, about these SPX levels, meaning, if like this is coming up here, it's almost there, right? The SPX isn't quite there yet. So the assumption is, if we look at the S&Ps, that it's going to get there. If it clears this highs, the assumption is it's going to get up to the prior high. And then, as I said, can it get through it? So let's assume for a moment, as a plan, it's coming back in here a little bit. Let's assume as a plan, it gets up there and gets slammed right back down. Well, we see a 15-minute bar get slammed to the downside, deep into the morning range, maybe down here. We start looking for call spreads up above 2,900. Right. I think below 2,700 probably is a no-brainer today. Wanting to get closer to that, you really have to go, down below here. So looking for possibly a trading range between 2,760 and let's just call it, I don't know, 2,900 or so. All right. Yeah, I figured no premium down there. As things get tighter, as they are, those premiums are going to contract. It's going to become less of no-brainer trades. It's just the way it is. So decisions have to be made. Spiders. Mike on YouTube says there's no good reason for the market to go up. It doesn't matter, Mike. If you want to argue with the market, not going to be a good day, right? Don't try and rationalize, the market per se when it's doing something. We can believe that there's no good reason, but if it's going up and you're an intraday trader, go with it, right? So the weekly charts are in downtrends. It's at a point where it should turn lower. So far, it's not turning lower. The question is already mentioned. Does this turn into an M top here? And it's not green. So your reference points are that swing high and that swing low, right? Basically last week's high and low. Continuation patterns like this typically are not high probability trades, but who are we to argue with if it starts to break out above this level and go up? I'm not going to. I'm going to go with an assumption that it can attack the 200 period moving average until proven otherwise. Qs, right, into this congestion there, 216 and a half, so right around this area. You can see the stall up there. We're basically neutral to slightly bullish going into this day, and we'll see what happens. Russell, Same story. Just jiggling around within the range up at the top. There's the factory work, transports. They turned back up with everything else on Friday. So maybe they're going to bring up the rear. So look, these kind of patterns that have been crushed and coming up and consolidating like this on a weekly chart, those are greater odds trades for longs than something like this. Not that this can't go up, but patterns like the Russell on the weekly time frame, consolidating at the top of a big green bar, and the transports, different, but somewhat similar, a little weaker, but breaking below a low and coming back up again, are the type of trades after climactic buys that historically have continuation patterns that work. So we've got setups that say, hey, this should work higher. And we've got other setups that say, this is lower odds historically to continue higher. But this is Coronaville. This is Mr. Schizophrenic market. So anything can happen. We'll see how it unfolds. Diamonds, right? This choppy, sloppy insanity of, gap up, continuation, right? Gap up, gap down, gap up, gap down, gap up, right? It's lunacy. But look, we've got the same reference points, right? No matter where we look, right? Last week's high, last week's low, trading range, uncertainty. It is what it is. So you take reality into your trading, keep your big opinions in alignment with what is, and it'll be a more profitable and more pleasant day. All yours, Dan.
Good morning, everyone. Yeah, I was just making a comment to FT, and when I said to you career, as opposed to you telling somebody he was going to have a bad day. And we talk about that all the time. Debbie lets fundamentals get in her way. And I'm like, Debbie, did you not trade the internet days in the 90s? Things going up, 1,000% with zero earnings. But yeah, we talk about it. And I said the same thing. I said, and I even wrote it in the weekend letter, folks. I wrote it. I said the spiders are only 17% down from the high, 27% rally off the low. And, people are scratching their head of why, and so am I. I mean, we got a guaranteed recession. I don't get it, but that doesn't prevent me from trading long if I have a compelling pattern, because that's what makes the market work, a collective beliefs of all market participants. So don't argue with the whale. If the whale wants to swim, northwest instead of southeast, that's all we're doing as traders is riding the whale on whatever time frame the whale is swimming. All right, let's look at opens here. We're very light in the weekly. Tilray, we have a put spread. And I actually did a chart of the week on this. I'm going to send it out later, talking about how we legged into covered calls for great gains, and also did a put spread Friday. Marriott, we have a put spread, beat up restaurant stocks, spiders. We got sucked into this call spread, and it was a sell setup on the daily Friday under Thursday's low, and it triggered twice here, and then breakdown failure, and then right there, that was a day trade. That was a beautiful long setup right there. So we'll move stop 30-minute high on that. Let's look at, we have a lot more open positions in the swing ladder. Alphabetical, ADP, we have a covered put. Aflac, no, Aflac stopped out. I gotta close it out. Let me do it right now. Okay, as long as the whale's not the JPM big trader. Debbie, again, the charts will tell us if it's a big whale or, yeah, our Aflac stopped out on Friday. Let me continue here with opens. APA, we're long stock and we've sold 2/3 of our merchandise. We're just in trail mode. APT, a little bio breakout, we're long stock. Boeing, we're long a put. That was a beautiful breakdown on Friday. We had a nice open gain at the low and now it's getting its sea legs back here. I would love it not to retrace much higher on the 15-minute chart. And then also to make that bigger, and then also to take out a 30-minute low. It has earnings this week, so we definitely are not going to be holding over that. BBBY. Yeah, it's a nice move up pre-market. It's a bottoming pattern. It's worth watching. Yeah, I'll put that on my gap list over here, Lou. Let me continue with opens here real quick. BLMN, we're long stock. CNK, long stock. And I tighten the stop to under 12 bucks just because it's not working right. CPA, this is a gap problem on our hands today. This was a breakout. Now, I'm not saying gaps like this are typical of bottoming patterns. I don't know what's going on. It's not earnings, but we need to move stop. 30-minute low for that. Let me post it. And yeah, I mean, gaps have been tougher here. I mean, you saw Greg's hourly chart. So I even mentioned that in the video that the only way around that is if you're going to swing trade is to use smaller shares and bigger stops. Ed, yes, that's exactly correct. You wait 30 minutes and you then put the stop a penny under the low. Now, you know, sometimes we use a 5-minute low, sometimes 30. So I just kind of default with a 30, but we'll keep an eye on it in case we want to get out quicker, because there's a judgment, there's a compromise there, meaning that the quicker you get out, the less you could lose, but a 30-minute could save you by giving it a little bit more wiggle room, so that it's a judgment call. And also, Ed, you can go into the members area under resources, and I have many great documents in there, but one of which is called "How do I read my trade?" These trade alerts, and I show you on a screen exactly what a 5 and 30-minute high is on an intraday chart. Kuro, we're long a half lot. Now that looks great, a wide range igniting from a bottoming pattern. Hershey, we have a covered put and we're in trail mode with an open profit. Hexel, short stock, big descending triangle breakdown. Livin, long stock. LDOS, long stock. These are just nice breakouts on Friday. Michael Jackson, covered call. I'm sorry, long stock, Michael Jackson. That's the ETF for pot. I'll be tightening the stop on that. Pins, long stock, beautiful 1, 2, 3. That was the most compelling bullish setup. RRGB, you know, ascending triangle, another beat up restaurant stock. Wow, we got a lot of opens. Tilray, we got a covered call I mentioned. Twitter, long stock, looks great. That was a 1, 2, 3, 4. I wrote in the letter that you could add to it. But now it's getting extended here on the 15. Yeah, I'll be looking to tighten the stop on that. Hey, John, Uber, we are long stock. Finally, triple V, we're long stock. So it looks like the CPA and the spiders are the only problem children. Let's go to gappers here. Zulu Mike, this is Zoom. I had a call spread in here for the weekly. Let's see how that turns out, because Facebook put a hurting on them with this late day breakout, saying they're going to enter Zoom's space and compete. Now it's gapping up huge. Some guy on CNBC this morning is saying, oh, Facebook's on sale, buy it. And, you know, whatever he looks at to make that statement, I just always say, well, where were you when it was $50 cheaper? Why weren't you saying it was cheap at 140? Naked. Nice gap up the way it trades. It looks like a buy of some sort. You know, but personally, I would only do those if they had a compelling intraday setup. NVIDIA here I saw had a bullish gap. Sting, these two, I posted this. You know, this had a beautiful gap breakout here. That was a day to enter. That was the day to enter, and it was on my list. I'm mad that I didn't give it. And then it was a gap and crap on Tuesday, so I stopped watching it. But we have 3 days of consolidation with a shallow retracement. So that's strength, and now it's gapping up, and it still has a price void to 30 and change. So that is definitely going on my long list. And I posted it pre-market to our subscribers. Let me give it to you all. Well, I didn't put it in my Word document. That's how I gave them the chart in that. 2 minutes to go. Let's look at more gappers. NAT's another one, but that, see how that one's further extended? So I like the Sting better. Duncan here. This is DraftKings. I didn't know it was that it IPO'd way the heck back here. I thought it was more recent, but no pattern there, but we'll keep an eye on him. Let's see, 27.18, that gap's too big. Meso down $1, that's a mess. 13 bucks, that's a big gap breakout. Now I would love this better if it were gapping, you know, let's say 1105, just right over that even number. But it's gapping too big for me now. Someone on YouTube is saying that CPA issued unsecured notes. Whatever. Yeah, so that's a dilutive effect. They don't like it. And Monica's also asking about Tesla. Tesla, I was going to put this in as a possible put spread, but it has earnings this week. All the FANGs, other than Netflix, have earnings this week. So it's gapping up here. It's holding well. It could very well, Monica, set up for a day trade and a swing trade. You know, check what the exact earnings are. You know, we don't mind trading bullish or bearish patterns into earnings as a pre-earnings run when, you know, people get on that bandwagon. Oil here down, you know, the front month contracts down 20+%. This is USO getting beat up. And the reason USO doesn't trade like the futures, it's because you got to look under the hood. They're different animals. Let me just continue with some gappers here. Deutsche Bank, gap up, had earnings. I don't like trading ADRs as a general rule. Beyond, Greg chickened out and not giving that as a long the other day. And I think that's been ripping because of the problems with the supply chains on meat processors. Like Tyson, I think, said they shut down. Carnival was in the news. There's a big article in the Journal today about how they sold some bonds and they got a loan from the government. But that was in March. I don't know why. There's a big article almost a month later talking about that. But Barron's also had an article about the cruise ships. That's the big three. So we're selling off here pre-market, which was my bias based on the 15-minute chart. Because look, from this bullish entry after lunch on Friday, and now it's gapping up. That's a short-term exhaustion gap at resistance. So yeah, I had a morning